Morning, Tuesday, November 29th, market analysis, Stan Ehrlich. And as usual, I start out with the stock market indexes, giving you some ideas and my opinions and so on. And my favorite is the S&P 500. We're looking at the daily vertical bar chart. I like vertical bar charts. They have the same information as candlesticks, of course, although candlesticks are more in fashion these last few decades. I started back in the early 70s. So vertical bar charts for me. Now, yesterday I mentioned that we're coming off of a resistance area, a little double top, and I'll zoom into that just a moment. So we had tested a resistance area. It was the beginning of a potential gap closure from way back on September 12th and 13th, but it didn't close the gap in this particular case so far, and it stopped at a previous high a week and a half earlier. So now we have a minor double top. We have not broken out of the formation. We need to close below the low on November 17th. And that low was about 390 exactly, give or take a small amount. And today's low is coming closer, but at around 93, not actually testing 90, of course, but it's a good support area around 90. Also, today's low is around some minor support, and we're talking only about 2.5 weeks here. So it's not anything huge, but it's bouncing off of things in the last couple of weeks. Now, the trend is up. The blue line across the bottom since October 13th, October low, which we talked about months in advance. And we got a whopper of a beautiful ER signal smack dab on the bottom of the market since that date. And that's going to go down in history as a very important date, has already. We have a bull trend line that is now 4 points on it, and today's low is pretty close. So support coming back to unchanged actually a few minutes ago, now down a point and a fraction. Are we going to hold this little trading range we've got started for a while longer? Or are we going to break out to the downside, break this bull trend line, break the support levels, and start something very serious? There is a gap to close below the market, actually two of them. One of them is very small at around 385. And then that starts at 385 down to about 381.5 for the other one. Regardless, we're looking for 385 or more to the downside once we start breaking to minor new lows here for a couple of weeks. But that's not a very big increase in decline. We have broken trend lines, and we are starting potentially to come down into what we call the Santa Claus rally approximate time frame. Let me touch on that for just a second, and I'll get much more detailed in the days to come. It is the tendency for the market to bottom out just before Christmas and then top out just at the very beginning of January. Historically, though, that very general statement has been very profitable, give or take around 90%, probably give or take 5% in the last few decades. So the odds are pretty good that we'll see it happen again as we did last year. And I'll show you charts in the coming days on the Santa Claus rally as well. But for the moment, sometimes there's a pretty good decline into that Christmas time frame, and then out of Christmas going back up again a couple of weeks or more. So if we're topping out here, that would tend to predict, and we're almost at December right now, that the next 2.5, 3 weeks would be down. So I'm favoring a little bit on the short side at this particular moment, but I do believe there's a chance we could still come up and bump up against the top of this gap closure area. 408.5 is what I've been saying, and maybe a tiny bit higher. Originally I said 410, but I lowered it to 408.5 for the trading range from 403 to 408.5. By the way, I missed this high by 0.09. 9/100ths of a point on the high rally in advance as far as my comments are concerned. So now it's been 2 days later. I was gone just before Thanksgiving. I'm looking for a turn down. I think this little double top could be a bit of a problem, but I'm not super convinced yet. So let's, see what happens for a day or two. I wouldn't be aggressive about doing anything. Let's look at the DIA. Now, that was an overbought condition that was very likely to produce a turn. It took a couple of days, but look what happened. It came up almost exactly to the high made months earlier, August 16th, and it topped out at almost the same price just last week on Friday. So we have a very broad double top or significant resistance area that's been established and in an overbought condition with some divergence. There was even more overbought a few weeks ago than it was just last week. And we had some sell signals that didn't work very well. The DIA did not form a head and shoulder bottom like the S&P and the Qs almost. It formed a double bottom instead. And it was obviously a bullish formation. So what have we got here? Major resistance, overbought conditions, divergences, and the beginnings, maybe, of the next leg down of significance. I want it to start closing below 332.80-ish. Again, on a closing basis, in order to be a little bit more convinced that that's it. We've now got a high in place Friday, a couple of days ago, of major significance. Again, not super confident about that. Let's look at the Qs for a moment. And the daily data for the Qs, we do have a trading system, ER signals, and it did make a fantastic trade. We had a major buy signal on the Qs August 16th, red bearish engulfing overbought conditions, bingo, the top, dropped it down all the way into October 13th when we had gigantic number of buy signals. I think I had approximately, I'm pretty sure it's 98 signals in one day. Normally we get 5 or 10. So October 13th was a whopper of a buy signal day. Now, that was the end of the short trade from the sell signal that we had on August 16th. Now, we've got a kind of a double bottom. It tried to make a head and shoulder bottom on the Qs. It didn't work out. And so all we've got here is a bouncing back and forth, higher highs, higher lows for the last 2 months. We failed miserably last week to make a new high for the move, which the S&P did by a slight bit, and the DIA made by quite a bit, got overbought. So something's getting weaker and weaker in the last couple of weeks on the QQQs, an underlying weakness. And today we have made a new low for 2 weeks. And currently we're at the previous lows for the last 2 weeks. So a strong rally at the end of the day is going to favor a little bit more of a bounce up few days worth, and a weak close today is going to be a little bit of a downside breakout. There's gaps to close at lower levels from only a few weeks ago, and the Qs have been doing the worst overall as far as strength was concerned relative to previous rallies, et cetera, since it topped out. And by the way, we did get a bearish engulfing on the QQQ November 22nd, the top of the long-term bull market, the high day, and another one a week later. The ER signals picked the top of the bull market at the beginning of this year and the very first day that this bear market started. We have a nice buy signal here at the low of this break. Basically, we had a fantastic, I mentioned already, sell signal here. Now, and of course, October 13th. So I've covered the indexes pretty good for the moment, and I'm going to go to futures. So we'll roll through these fairly quickly. I'm going to start with wheat and end there. So the ER signal picked the top of the market on a series of limit up bid all day long, lock limit up days because of the war, and got the top of the market in wheat. We don't have any signals recently that have been particularly good, a sell signal here, but we are now oversold for the last couple of days at a support level, and guess what? That probably means we're going to start to rally some. Next chart. Some great sell signals here, a couple of good buy signals, and this is platinum, nothing at the moment, kind of neutral to a little friendly. The trend is up. Next. Excuse me, high-grade copper. Caught the top, caught the bottom, kind of neutral at the moment, sideways trading range, not too much to say. Next, natural gas. Got oversold at the bottom. Sorry, there's no signal per se. There was at the top. I'm neutral to a little bit friendly, just like the previous chart, because there's nothing going on here of any major significance. We got a little overbought, and we've already pulled down some. Next, trend is up. What is this? This is bean oil. Trend is up. I favor new highs, but we are getting kind of stuck in the previous resistance zone from several months ago, April, May, June. And maybe things are a little bit on the more neutral side, not much more to say. Next, two buy signals a couple of weeks ago, coming up slowly. Need an upside breakout. Getting above 681 would help a lot. In the meantime, I've got to expect that to happen. I'm friendly to bullish. We'll see what happens. These buy signals haven't been all that great. They're okay, nothing special. Next. Recently, we had a sell signal in soybeans, didn't work out, small loss. I'm fairly neutral on soybeans at the moment, nothing to say. Next, we got a sell signal on top. This is what you love in cocoa. Overbought conditions for a week prior, had a bearish engulfing in overbought condition levels, and bang, down we went. Bounced for the last few days. I'm still bearish, looking for some lower levels, but we are getting back into some support areas. Next, sugar. Sell signal while I was gone on Thanksgiving vacation, and it worked great. The first decent update today since then. I'm looking for lower levels. We've got a couple of good sell signals here. There's one. I didn't mark that one, but that was on top of the move as well. Next chart. Great sell signal back here, but that's ancient history, August 16th. A few on top of rallies and the top of the bull market, point blank. Those are the ones you love. Nothing lately, but we're oversold right now. Don't go selling short. Look for buy signals. Nibble at the long side if you wish, but always use good money management. Absolutely, emphatically, money management is the key to many different trading systems, practically all of them, if you ask me. Next. Kind of looks like a head and shoulder top is trying to form. Last shoulder high 2 days ago, of course. Overbought on the first shoulder, overbought on the head of the formation, slightly downward slanted neckline, which I haven't plotted, starting on October 27th across the low of November 14th. What can I say? Overbought, head and shoulder top possible, something to keep your eye on for sure. OJ. Next. Meal, soybean meal. Sell signal a couple of weeks ago, worked great for a few days, going up slowly, kind of like an upward slanting channel. By the way, comment, upward slanting formations in a very broad general sense are usually bearish formations. Upward slanting wedges, channels, pennants, head and shoulder tops that are slanted upwards in general, et cetera, et cetera. So slightly higher highs, slightly higher lows for the last couple of weeks, but the overall trend for a longer term is in question. And I did get a good sell signal. So neutral to bearish here, and that was soybean meal. Next. Buy signal today, brand new today, heating oil. Yes, I would be very interested in buying heating oil. Yes, I would be putting my sell stops immediately below today's lows, no matter where you buy it. And we've got a brand new buy signal in heating oil today. ER, bullish engulfing, in oversold conditions. Next. Not much to say about live cattle. Next. We have had some trades in the 10-year notes, some whoppers in the last couple of years. So I show you the equity plots and the trailing stops. Lately, we've formed a head and shoulder bottom. We have already broken out of it, and that was on the 10th of November, but we're coming up slow. Now, the minimum upside objective on this pattern is 115 almost. Therefore, call it 115. And so far, so, but it was mostly on the breakout day. And again, that was November 10th. It's a little bit lopsided pattern. All the arms and legs are there. Shoulder low, oversold conditions. Head of the formation, also oversold, and a divergence, very common. Oversold, but not lower than the previous oversold condition. That's the divergence part. While prices make new lows, the indicator didn't. Last shoulder, okay, a little tight. The time from the first shoulder to the head is frequently very close to the same amount of time from the head to the last shoulder, which would have put it a little bit over here. But anyway, it's still good. Next chart. Minimum upside objective 115 again on the 10-year notes. And then what? We caught the bottom in the coffee market while on vacation. Or yeah, I think that was it. Caught the bottom. That's great. That's what the trading system is built for, as well as the top of that rally on November 7th of 21, quite a while back. But bearish engulfing, overbought condition, fantastic. So I'm bullish. What can I say? Today, new high close in coffee since the signal, period. Next, we got the bottom on the December continuation chart on the E-mini. Now, yes, this is a futures contract. It's also a stock market index. And we did catch October 13th, of course, like we did in innumerable indexes and stocks and stuff like that. So this is a whopper. Again, I'll repeat, this is going to go down in history. I talked about the October lows way back 2 months earlier. And I'm so happy it happened so accurately this year. It was a whopper. Next, bonds. A little bit of a lopsided head and shoulder. I didn't even detail it because that's so sloppy. You can call it a double bottom. I'd like to do that instead. Oversold at the bottom, of course, and not quite in the second low. But we do have probably a little more elbow room to the upside. I'll call it 130 to 131. That'll probably allow the 10-year notes to get to its upside objective as well, and that's where the resistance really starts to hit. I don't know what's going to happen after that, but I think we're going to go to 130, 131. Next, crude. Support levels look like they're holding. Yesterday, we got oversold again for 2 or 3 days in a row and turned around after opening lower and getting into new low ground for many months. And it didn't stay there. And it actually closed higher on the day. So we're up a little bit more today. That looks like a major support area to me at 74.30-ish. Let's call it 74, 75. And here we are, 78.51. So I'm looking for this to work higher. Any closing price above 93.94 area would be quite bullish for crude oil, as much as I hate to say that. Next, got the bottom of the gold market, the low day for weeks, came down to the same support area, bounced again a third time. Triple bottoms are pretty rare. That's what we're looking at. We've made higher highs since the last low, got overbought, so you want to have some sort of correction. We've had it. Are we on the way up again? I think so. I think there's a pretty good chance of that. One major comment. We are getting back into a whopping amount of resistance where it stopped before in that 1,800, 810, whatever area. We have to get above that. Then it's going to turn very bullish again. So you have to close above, let's say, 1,810. Meanwhile, I'm looking for a little bit higher. I don't see any reason to abandon the friendly new uptrend that seems to have started. Next, silver. Same kind of comment. It's cleared some resistance already and got overbought, pulled back, and it's in about the same condition. I'm looking for higher levels. Next, wheat. We started here, ending here. I don't want to leave out sector symbols. Remember, the system trades sectors also. There are individual stocks, obviously, in every sector. If we get a major buy or sell signal in the sector, don't you expect, of course, that you're going to have many, many buy signals, mostly in the symbols in the sector, to create the sector signal itself? Of course. So I don't know what symbols are behind this sector, but this one happens to be the banking. Bullish engulfing at the bottom, ended up at a support area again and turned back up. I'm looking slowly for higher levels, but this doesn't seem to be very aggressive. This is a very iffy type of bull move. It could turn down again quite a bit. All right, next, SMH. I'm going to fly through these pretty quick. Caught the bottom, bullish engulfing. What can I say? Got overbought, a little neutral at the moment, but I have to favor up. Got the bottom, I favor up. Next. No bullish signal at the bottom, unfortunately, but it was very oversold. No particular comment here at all on XLU. This one's XLY. We caught an excellent buy signal. First low of a double bottom. I'm kind of neutral to friendly. XLF. Bullish engulfing at the very bottom, but unfortunately, it wasn't quite oversold enough to get me a bullish ER signal, but it was so close. Lately, we had a bad sell signal. It only went down for a day. A little profit opportunity, but not what I would like for a really good sell signal like this one over here. Yay, what a whopper on February 10th. And of course, the top of the whole chart you're looking at, January 13th of 22. Bingo. Those are the ones we want to be sitting on trades for. Next is XLI. Oh, I'm on already. Sorry. XOP is coming up now. Come on. Don't tell me I've got data feed problems again. Oh, no. XOP should have popped. Ah, there we go. Sell signal just a couple of weeks ago. On top of that rally, like to see it drop off a lot more, and I just lost my damn data feed. Sorry about that. So I may have to stop here if I can't get new charts to pop up. Okay, that's been good. Sell signal a few days ago, slightly bearish. OIH on the top of the market, got a sell signal, looking for lower levels. This is a new low close since that sell signal. XLB, double top formation, overbought on the second high, looking for lower levels. XLP today is a new ER signal, bearish signal. Bearish engulfing, overbought conditions, gapped up a few days ago also, and in overbought conditions. Okay, this is great. Love to see this kind of combination. Looking for a big move down in XLP. Next. Same comment for XLV. This is the health sector. IYE. Shoulder, overbought. Head and shoulder. Neckline slants downward slightly across the lows of the first point would be November 9th and the low on the November 21st date. So it's got a little ways to go to break out of the formation. We gap down today. Unfortunately, no ER signals currently. We'll see what happens, but looks like it's forming a head and shoulder top. And I will touch on forex real quick. We got the bottom of the euro dollar to the exact date, September 28th. Had a sell signal that wasn't a good one. Lost a little on that one. But we have gone up to what I expected, 104, 3 to 4.5. I think I was mentioning weeks and weeks ago, into a resistance area. So now we have a minor double top maybe. It's the beginning of the formation. I'm going to have to be neutral to looking maybe toward the short side. And we're going to go to the dollar index, which is pretty much the exact opposite. Sell signal on top, double bottom at the moment. I'm going to go to the dollar yen, bear signal on top, ladies and gentlemen. Aussie to the dollar. We bought the bottom. US to the Canadian. We've sold the top. Dollar to the Swiss, and I'm not kidding you. These are legitimate signals. I can explain it, and I've got the system to rent.
US dollar to the Swiss franc. Some really good signals in this too. Well, that one was not good. That was great. That one was okay. That one was not. That was fabulous. That was fabulous. One way over here was good for a couple of days. And the last one, until we part, euro to the pound. Nothing new here, unfortunately. Just got oversold and is bouncing a little bit. That's it for today. Thank you very much. Stay in